Ultimately, there are going to be places where we overperform and places where we underperform. Where we underperform, did we have the right goals, objectives, key results? Or do we have the right goals, objectives, key results, but our strategies and our tactics are off, right? So we've got to figure that out so that when we're working with clients, we're keeping them on the path to where they need to be. And it's easy if we're not on that 90-day rhythm, and if we're not, really dialed in during the course of those 13 weeks, it's easy to get to the end of the quarter and not be surprised because we've seen the trend lines, but we also haven't thought about how do we impact it.
Oh yes, this is the Hardcore Marketing Show. I'm Casey Cheshire, your host for this epic journey. Today's show is sponsored by Ringmaster, on a mission to launch B2B podcasts that create relationships, generate revenue, and drive growth. Ringmasterlive.com. Bam. All right. The train has left the station, man. The roller coaster is going. We're going up. I'm so excited for this one. I can't wait to introduce my guest today. He's a really smart guy, but he's also kind of cool too at the same time. I got to tell you about him, all right? He is both entrepreneur, marketing, and sales leader. Like classically marketing trained, yet at the same time, sales leader. I just call him a revenue leader, which is really what it is all about today, right? 25 plus years, at least that's all we'll fess up to, in health and finance and marketing. He's led 50 and 100 million in brand growth for Samsonite and Hasbro. He's been honored at the Oval Office with an award for excellence in exporting. My goodness, President and Chief Revenue Officer at Cruise & Co., Brendan Leonard. Welcome to the show.
Casey, thanks for having me. This is exciting. I'm not sure all of those things are fully mine, but a lot of teams achieve those. But happy to be with you today.
Yeah, as I was reading, I'm thinking, oh my gosh, how do we get him on this show? What strings did we pull here? But man, I am so excited to learn from you. So I'm going to pass you this thing. It's heavy, but clearly you work out. Here we go. Okay. All right.
Oh, look at that.
Brendan, go ahead. Grab Thor's hammer.
That's a beauty.
Okay, you got it? All right. All right, now take Thor's hammer and smash for me some kind of marketing and sales myth, a bogus strategy, misconception. Set the record straight once and for all.
Yeah, it's a great question, Casey. I think ultimately it's, AI is amazing, right? It's faster, it's more efficient, great analytics. But AI alone is not getting companies to where they need to be. We all need to use it, but ultimately it's the basics that matter, right? People still buy from people. You still need to identify your ICP. You need to matter to your ICP. And I think from a marketing and an attribution standpoint, and from that handoff to sales, right, you have to execute. You have to execute. You have to pick up the phone. You can't hide behind the keyboard, right? It's like, right, like Teddy Roosevelt said, right, you have to be in the arena. And I think that's a balance. We all fall in the trap of AI and automation, and I can run these campaigns and I can take some of the people out of it, and you can be more efficient. You're not necessarily going to be more effective, right? If you can optimize with your team in AI, fantastic. But the basics still matter. You still have to get in the arena. You still have to mix it up with your customers, and you still have to matter.
Man, why do you suppose this happens? Is it just the basics are boring and we want to do all the kind of crazy new stuff? Or why do we ignore the foundation of what we're supposed to be doing?
I think it is boring. And, it's the shiny object, right? So, worked with companies big and small, and the biggest killer of growth is distraction. And AI can be an incredible accelerator, but it's an amazing distraction, right? And you can get off strategy, you can get off topic, you can still get amazing stories, right? Your data and what you're telling yourself, and right. But there's activity and productivity, right? Two different things. We all know it. It isn't glamorous to do the basics, whether that's on the sales side, the revenue side, or, even ops and analysis. I think it's somewhat of it's the trap of the shiny object ultimately.
I feel like, man, like a minute in, we've already dropped a bomb. We've got the clip for the show. Literally, what an idea! The idea that of all the companies you've worked with, big and small, and I know you work with a bunch at Cruise, which we'll get into, but all these are distraction is the biggest killer. And man, is an AI distraction. I feel like I'm distracted right now. I'm not even paying attention to you right now. I'm actually just chatting with AI right now.
I'm not even sure this is you. I think you might be an AI image.
Yeah, it's true. It may not be me. It may just be an AI agent doing this pod for me. But yeah, so we get distracted. How do you fight against that? I mean, things are just so shiny around the place.
Yeah, ultimately it goes back to, what's your strategy, what's your goal, and how are you tracking it, right? So it again, it's nothing glamorous. It's the basics, and AI can help with that. Like from a salesperson, right? When's the last time you talked to a salesperson that loved to use a CRM, right? Said no salesperson ever, right? And the marketing people will beat them down because they can't get the right attribution. They don't know how to double down on on their spend. And so, and what's the latest? Well, we can infuse AI into the CRM, and we can do more, and you can do all of those. And there is a benefit. There's a tremendous benefit, but you still need to be infusing the data within the CRM with the human element, right? What didn't come out of Otter? What didn't get captured in as strong as the recordings are, and the tone and the coaching impact. What ideally, if you're face to face, right? What wasn't said, and more importantly, when's the next follow up? What's the issue that you need to address? Because I think this is a marketing driven show, but ultimately it's that eternal battle between marketing and sales, right? And finding that balance so that they're not gladiators in the arena. They're actually on the same team, which is, oftentimes easier said than done.
What is your take on that battle, that marketing and sales? How do you, and right now, you would say primarily in the sales role right now, or are you owning everything and you're seeing your guys battle?
Yeah, I own everything, but we've got a great team around us.
So do you own sales and marketing right now?
Yes. Yeah.
How do you balance it? Like, is it like, when your team is chatting or trying to do budgeting, does it feel like the family around the Thanksgiving table and everyone's just arguing, or how do you get them in lockstep?
Yeah. I mean, right. Ideally, there is a little bit of healthy friction, and there should be. And I think it comes down to, like, in our world, we'd say, what's the 3-year goal? What's the 3-year? What's the 1 year? What's the 90? Right. So are we setting the right targets? Are we delivering against those? Right. Are we making progress on our OKRs, on our weekly scorecards? And if we're not, do we know why? And do we have a plan to fix it? And so I think the easy part is, marketing people will tell you that the salespeople can't close, and the salespeople will tell you that the marketing people don't give me good leads. And the truth is somewhere in the middle. And ultimately, right, none of us are perfect, and none of our individual segments are. And so it's finding out how can we improve the attribution, improve the lead quality, make sure that our sales teams are having the right conversations, categorizing them the appropriate way, and ultimately, right, driving revenue. Because otherwise we can spend a ton of money. We can make our leading indicators look great. But if we're not seeing it translate to revenue, it's going to ultimately impact how can we move the needle for our people, for our company, and for our investors.
Yeah. You mentioned the 3-year, 1-year, 90. Is this sort of your planning mentality, and how do you get everyone to be on the same plan?
Yeah, for us, it starts with the senior team, right? On what's the vision, right? What's the 10-year, but more importantly, what's the 3-year planning horizon? And then from that, what's the 1 year? And then from that, what's the 90? So for us, we get into that rhythm of every 90 days, we're meeting with clients. And the reason we do that is it's a 13-week sprint. And if we don't do that, what will happen is we'll get to, mid-year, mid-year or an annual review, and we'll say, we thought we were going to fix it. We didn't, right? We need to address the issues earlier, especially in an exceptionally fast-paced time frame. We need to be analyzing the data, but we also can't, right? We can't overanalyze the data. We need to be able to step back, draw the conclusions, and then impact what that go forward strategy is. And the reason for us it's important on a 90-day rhythm is we also then have to reflect back on, well, where are we versus plan? Where are we versus year ago? And how are we tracking against our, on our 1 year, 3 year, especially now, right? We're closing in the second half of the year. What's the most important thing in the second half in Q4? We want to leave this year on the trajectory to deliver our 26 plan, right? Because if we can't, then our 28 plan is already in jeopardy, right? And I think, the public companies and what I've worked, when I've worked in those environments, right, you're just naturally dialed into that 90-day rhythm. But even then, right, you're still looking at to an eye to the full year, right? And they always have, right, you always have the levers you can pull. So what I love about the rhythm from the cruise segment is it does dial it in on really moving the alignment and the accountability so you can get the right level of execution, and driving it through the entire organization, kind of top down and across, so that when you're looking at your revenue and your profit and ultimately your company valuation, you're able to impact that on a daily, weekly, quarterly basis. And we're all going to have misses, right? There'll always be things we miss, but the question is, do we know why and do we have a plan to fix it? And I think with the right methodology and mentality, the most important thing is that senior teams can't own all of the solutions, right? So they have to empower and push down, the accountability to other levels of the organization. So for us, we've got a great CMO. We've got a great marketing team. We've got strong consultants. So they're all working in different areas, but ultimately there are going to be places where we overperform and places where we underperform. Where we underperform, did we have the right goals, objectives, key results? Or do we have the right goals, objectives, key results, but our strategies and our tactics are off, right? So we've got to figure that out so that when we're working with clients, we're keeping them on the path to where they need to be. And it's easy if we're not on that 90-day rhythm and if we're not, really dialed in during the course of those 13 weeks, it's easy to get to the end of the quarter and not be surprised because we've seen the trend lines, but we also haven't thought about how do we impact it, right? Because now you've got to look at it and say, okay, can I impact it the next quarter or have I actually just lost the year?
Man, having an eye on the 90, but then an eye on the year as well. I see my eyes are all over the place here.
And it gets back to that distraction, right? So you've got to have the plan to dial in where the efforts and where the conversation's going, and even from a marketing standpoint, right? Is it a campaign? Is it product development? From a consumer goods standpoint, when I was at Samsonite and Hasbro, it was a much longer than that, right? Because you had to be in product development. You had to be thinking about, next year I'm going to come out with these TV drivers. I'm going to budget that in advertising, but in order to do so, I need something worthy to advertise. So you've got to be partnered with your product development people because that cycle might be 18 months, right? So, but you've got to be feeding the engine in order to deliver the results in that Q4 timeframe.
Are there, so is the plan the primary way to avoid distraction?
Yeah, I think it's the plan and it's the methodology.
Yeah. Let's talk through that. So,
the plan frames it. The methodology keeps you on track. And then the senior leaders, right, or the leader of a department has to be running it with discipline, right? And it doesn't mean that plans don't change in a quarter or in a year. They do. It doesn't mean that unforeseen circumstances, good and bad, happen. But what you don't want to do is kind of go into the rabbit holes, right? And I think AI oftentimes will do that. It's like even at, within our realm, right? There will be opportunities and we'll say, well, is this just an interesting situation or is it something we can productize because our clients need it? And we see that on the client side as well. Is it a trend or is it something they can action against? And is it something they can do at scale, right? And is it truly ongoing revenue or is it a short-term component? And how does that impact their business, right? Do you have something you can sell a tremendous amount of, but you're going to be in and out quickly? Is it an entryway into a new client or are you going to accelerate your acquisition, but you're also going to accelerate your churn on the back end? So what have you spent, right, to bring that new revenue on board, right? So you've got to think through, how does it actually add to, your offering and the impact on your consumers, your clients, and what does it do to your people on throughput?
Yeah. How do you know when the number is right as a goal? How do you predict that?
Ultimately, it's part art and part science, and there never is a perfect number, right? It's like a sales forecast or a production forecast, right? It's based on a set of assumptions. Whether or not you hit the number, miss the number, or far exceed the number, it's less about that finite object, right? Unless you're reporting to the street, that's a different story. That's a finite target. You have to hit it. But even internally, right, with boards or family members, right, whatever it is, there's a target. There has to be an art and a science to it. It has to be backed up within all of your key assumptions on whatever your revenue and profit drivers are. What are the levers? What can you control? And then how does that sync up with your overall plan? So, there is no perfect number. I think the only time that we really, I think the time that you really see those more challenging conversations is when someone says, we're doing 10 million today and we're going to do 20 million tomorrow. And you say, okay, great. What's the map? What's the math look like? And you say, well, we're going to do more of what we've done. Say, well, no, now you've got to drill it into your revenue planning. So are you doing it with new customers? Are you doing it with new products? Are you doing it with price increases? Are you going to, eliminate your attrition rate? Now start to build that out into your financial model so that you can track it. Like I was talking to an entrepreneur yesterday, and we were talking about some needed evolution within his business, from a leadership team perspective, and even some departmental, resources they needed to bring in. And so we started talk about the timeframes and when would they do that. And he had it pretty well mapped out. And I said, well, how does that now sync up with, your 3-year cash flow, your 3-year budgets? And that they didn't have. They had it kind of the back of the envelope. But what we would say is your finance ops and people, they all have to be synced up. They all have to sync up. So if you say that, hey, I'm going to go from, a fractional CMO today, and I'm going to hire a full-time CMO in 3 years, there's a defined cost and investment for the business, and there should be trigger points within your journey, because you may far exceed it and say, you know what, I actually need to hire that full-time CMO in 18 months. Well, that should be an easy decision for them to make if you have your 3-year, financial modeling done, and you'll know what those trigger points are, right? So the goal on, we want to hire X person at Y time frame has to be backed up with, does it make sense for where the business is and where the business is going?
Do you ever encounter plans that are, when you actually put the math down, it says, oh, cool, you're planning on growing like 800%. And you're like, what wizardry, what magical power do you have that you're going to just pull, 1,000 times more leads out of thin air for no extra cost? Do you bump into those?
Oh, certainly we do. Yeah, it's either they don't really have a number, or they have a number that's not based in reality, right? So then it's, part of our role is to be the point of accountability, right? So what's your plan? How will that happen, right? And now show me let's go through the math, and sometimes they have extraordinary growth plans, and you start to go through, the assumptions and the leading indicators they've seen, and you can see, right, you can see the build to that. So it's not about, trying to be the teacher and correct an assignment. It's about, if we're going to set a target, we want to hit the target, and we want to know what the assumptions in the build out is, right? We want to double down on those and make sure that we're not fooling ourselves, because I think, and certainly we see a lot in the marketing side, Casey, is all we're going to do is throw more money at it. Money, we can solve this with spend. And the issue is, right, you can always spend more money, and there's a time lag on what that return is. So like when I was at Capital One, I think it was in the kind of the early days of when they were just pounding the hell out of credit card offers. And they had such a dialed in analytics that they weren't a credit card company. They were really an analytics company. But they were so dialed in test, learn, and expand. And they tested everything. They tested the size of the envelope, color of the envelope, what the offer was, right? They had a million points of data. But what it allowed them to do, even though they had a massive marketing budget, they were only increasing their spend on the attributes that move the needle, right? So I think that's something, whether you're a big company or a small company, start small, drive data, right? The data is your friend. And I think that's a lot of what AI becomes, right? Is how do I harness the data I have? But then how do I ratchet up the spend when it makes sense? And ultimately, every spend's a risk, and right, no marketing person or campaign can guarantee anything because we don't know, ultimately how the market will respond. So how do you make the right investments at the right time to move the right needles to drive you to the business that you need and ultimately the plateaus the companies want to achieve?
Okay, so and this is really fascinating. I feel like I'm talking to a wizard in this realm.
That you definitely are not, Casey. I can assure you of that.
It sounds like that. Okay, how do you project what your future numbers are going to be if you don't necessarily 100% meet them the year before? Like let's say we haven't met 2025's goal. How do you then project 2026's goal or 2029?
Yes, yeah, it's a great point, right? So some of it becomes why did you hit or miss your number, right? So if it's in CPG, did I was I late on a pipe fill for Walmart? Did I get a product discontinued from Macy's or CVS that I was banking on? Is my new product delayed? Right? Are there things that I can point to and say I can control for those elements? But look at my last 13-week point of sale reports, and I can now see that, seasonality aside, I can now bank on, with the right level of support, that revenue continuing. Um, and now I can take that and I can learn from it, and I say, I'm going to make the assumption that trend's going to continue because I'm going to introduce these products. I'm going to layer in this type of, promotional support, and I'm going to win these new doors. Okay, now we can start, but now we can also take those and we can build them in. Now we're tracking them on a quarterly and a weekly basis. So we'll know whether or not we're hitting. On a services business, is it a situation where you launched a new service, or you brought on new BDRs or new salespeople, or you invested in a new marketing campaign, and you have your statistics and you can start to measure those? Or do you pick a number and you say, what, my churn, my net retention is X, or my churn is Y, and I'm going to introduce, more in the account management function, and I'm going to be able to mitigate that. And you may not know for sure you'll be able to do it, but you have a plan to do it. You're implementing your plan in your quarterlies and your annual planning sessions, and now you're tracking it. And so, ultimately, you want to set as aggressive a number as you can, but it has to be believable for the team, right? Because we've all been in organizations where, that happens. It's, hey, guess what, guys? We're now gonna be $150 million brand because we have to be, right? And so even within those environments, then, the leadership and the brand teams and the sales and ops folks, they have to work together to say, all right, we can get there. We can bridge this gap, but we're going to have to do some things differently, right? So that might be NPD, it might be revenue or support, might be geographic expansion, right? Or it might be M&A roll-ups, right? Acquisitions, right? The inorganic component. So we see that a lot with our private equity folks, right? They're planning out their value creation, and they're looking at everything in terms of how are they going to maximize the value of that asset. And some of it is inorganic with M&A, some of it is, expansion, some of it might be with cost control, right? So you start to look at all those different levers to say, we do need to set a destination, but now we need to develop the plan. And the plan isn't foolproof, right? Because we have to put those assumptions in place, and there are always things we can't control. We have to measure them. We have to study the data. And I think the biggest asset that any company has, and I think AI is a major help on this, is it's not just the analysis of the data, right? But what does it mean for my business? right? It's like like with Cruise, before I came to Cruise, I hated consultants, right? Because they'd ask you for they'd ask you for your watch and then they tell you what time it is, right? And everything was best practice on a large scale, but it didn't mean that the company could implement it, right? So you have to take the understanding of what does it mean for that business? How do they go to market? Who are their customers? Right? How do they win? And so what can they actually execute? And so you have to bring that level of understanding. And I think it's what the Cruise team does exceptionally well. They're all of our consultants are people that have been there. They've done that, right? They've made the mistakes. They know what to avoid. And we're not perfect, right? So, but we can bring that level of questions and guidance and help companies think about what is that growth journey and how am I going to move the needle? And more importantly, things will go wrong, right? So now how do we help, solve the problem and get the company back on track? Or things are going great. And now, right, it's like what happens with a salesperson, 3/4 of the way through the quarter when they've blown out their number, right? Well, maybe I should push some of these deals into the next quarter, right? So you've got to create the right culture where, quite frankly, and from a sales side, where you get the right compensation plans so that you want to optimize everything kind of quarter on quarter, because ultimately that's, when you start pushing deals out, right? Time kills everything, something will come up. So, that's really what our focus is always about. How do we drive revenue and profit? It's always 90% people. And from a marketing perspective, right? Who doesn't need marketing help? Every company we talk to, right, needs marketing help because we need better lead quality, right? And it's always easier said than done. So, I think the more we can dial that in and try to push the right buttons and then analyze the data and then be able to take the data and drive it into actionable strategies, now you can start to move the needle.
Yeah, see, that makes sense. Do you do you have a like if someone's staring at their 3-year target, do you have like a special way of asking the question to know if that's BS, or is it really that roll up the sleeves and look at the assumptions and look at the indicators and
Yeah, I mean it's tough to say without because every business is somewhat unique, right? So you need to be involved. I think if anyone says, "Yeah, I can just look at your number and tell you," right? Maybe Einstein can. Maybe there are a select few that can look at it and absolutely call out the number whether it's BS. Um, but I think ultimately, right, you need to understand enough about the business and the capabilities and the leadership team, right, or their product flow. And some of it flows from, either ownership or whether that's a founder or a board or a private equity group, right, would they also be happy with that number, right? Because then you start to, it's not just can you deliver it, but will you be happy with it? And I think that's, sometimes I'm not happy with it, but it's the right number. Now you start to peel back some of the other components. Then why is that, right? Is it a capability? Is it a people issue? Is it a total addressable market? You start to ask more of those strategic questions on why can't that be the number? If it's an aspirational goal, it's an aspirational goal, but now let's drill it into how are we actually going to achieve it?
then I guess as you're planning that, can you tell me more about the assumptions? You mentioned this several times. I mean, are you writing these things out? Are people scoping? What do they sound like? What do they look like?
Yeah, so it's different in every company, right? But if you're looking at like a revenue perspective, like for us within Cruise, right, we know that we need X number of clients at Y, at Y average revenue minus, so much in attrition or churn on an annual basis, right? We should be able to layer in some elements within cross sells, or other services we're delivering. We need to think about how are we going to go from a client count of X to a client count of Y. That will likely tell us then what we need to do is, as we have more success, our current team starts to approach capacity. So we need to now be thinking of, all right, what's the right cadence for bringing on new consultants? Where are the places we should put those new consultants? Where do we need to acquire both consultants and clients? We love EO. It's an amazing universe, an amazing organization. So that offers opportunities, but so does Vistage, so does YPO, so do industry events that, our core clients and great clients are exhibiting at. So you need to think through what's the roadmap for us to get to our number, right? So what are the levers that the company can pull? For many organizations, it's we want to make an acquisition. All right, now what does that mean? Can you afford it? Do you have the line of credit? Do you need access to someone we have some amazing strategic CFOs, and where they often help our clients is we want to make acquisitions. How do we do it the right way? Well, what's the right deal structure? Do you have the right legal partners? Do you have the right financial backing? Is the structure of the deal right for you? How are you putting that together, right? Because all acquisitions sound great until you have to take them, integrate them, and then get the value over the next 2 to 3 years that you planned, right, when you were looking at the sim. So, for us, it's great. You're going to get that with acquisitions. Now what happens when when you're successful, what does that look like? What additional resources do you need? Make sure that is truly, accretive and doesn't become that negative distraction. Do you destroy the business, right? We've seen them all. Like for us, when I was at the company where we were at the White House, it was a smaller company. We could outmaneuver larger businesses because the bureaucracy would get in the way. So we ended up being bought by a much larger business. Unfortunately, a lot of what made us successful was managed out in the bureaucracy. And so they bought us for this amazing new product development engine. They ended up losing that, right? So you've got to think through what are you buying and how do you structure that? But maybe most importantly, does the term sheet work for your business, right? So, and especially in the SMB world, that's incredibly important because you get off sides on the deal, you don't realize the additional gains, and you may actually, have less funds available to invest in your core business. So I think those are the types of drilling in on the assumptions to say, if you want to do X, how do you know you can do that? What's non-negotiable they have to win? And then put time and measure to it, and then make sure that you're actively managing that appropriately so that you don't get the surprises.
For a lot of companies, it does seem like it is the sales side, right? Sales marketing side. That, okay, we're projected to grow. Well, that means keep the clients for sure on the operations side, but all right, sales, do your thing. And so we're looking at like, hey, how did you do this year?
Yeah, how did you do this year, right? Why? If you're off, why? Right? So, so if it was a professional services firm, right, is your net retention off, right? How are you cross-selling services? Do you have annual price increases built into your contracts? What is your average customer life? What is it costing you to acquire it? Are there opportunities for you to decrease your cost of acquisition? Or do you need to, can you justify a higher cost of acquisition because of your lifetime, your revenue, and your margin? So each company has its own kind of path to success. Again, service business and a CPG company, two completely different elements, but there are pieces that they share on. All right, well, we need to acquire it, we need to service it, we need to sell it profitably, right? And then like, what's the one piece that whether I think goes across all industries and sometimes is overlooked, not all the time, but it's contribution margin by client, right? So not every client is made equally, right? So, in our world, we knew that if we wanted to get into Walmart, we knew the contribution margin we had to be really dialed in because the margins were much tighter. Other verticals, not so much. On the service business, like we have a finance and HR business, we're scoping projects based on, basically how much time will it take us to deliver excellence to this client. Well, depending on the situation you get yourself in, you can get off sides quickly within your scope of work. So, what defense mechanisms can you put into that? What type of conversations are you having with the clients? And ultimately, are you looking at that, depending on your business and the structure, but are you looking at that contribution margin per client on a regular basis? Could be monthly, could be quarterly, could be annually, depending on the business. Because ultimately, that's going to impact how much do you invest to find similar customers, or how much do you want to grow with that, that individual client. So it's, in theory, it all looks good, right? At the 30,000 foot level. But when you really start to, attribute what is my cost to service that product, that customer, it starts to change some of how you value and want to do more with a specific segment.
Man, that makes sense. How how do you take it the step below that? We've got the targets, we've got the assumptions, we've got this, and you mentioned a couple times the idea of like plugging in what needs to happen in order to make that number true.
Yeah. So for us, we would go department by department, right? So for marketing, what does that mean that we need X new leads? Well, what's your best acquisition play? How much are you acquiring digitally? How much are you doing through events? How much are you doing from referrals, right? What are you doing from, different types of campaigns? Do you have, is it a, do you have influencers if you're a consumer company, right? How are you acquiring new clients? And then how are you evaluating those campaigns, right? I know you had Steve Gradman on right earlier this year, right? And he's constantly looking at that for us because of because of the impact of AI, the saturation digitally. You have to do it, right? And you have to find a better way to do it and a better way to drive lead flow. You need to do it at the right spend level. But when you start to look at the plans for any of the segments of the business, could be finance, could be ops, could be, revenue, could be marketing. What are the steps that will drive the business to get you to your number? And then how are you going to track it in the next 90 days? Right. So for us, we drive it down to the departmental level. We have scorecards. We want to track all of our leading and lagging indicators. And we want to know that every week we should have a specific result. Did we hit it or not? If we didn't hit it and we didn't hit it for a number of weeks, all right, that's a concerning trend. So what's the plan? Right. So the departmental level, or the leader who in that segment, it's common for them to assume that they have to fix it, right? That they own it. And ultimately they do, but they've got an amazing team, right? So the question becomes, what's the team's plan, or whoever owns that specific metric? Do they need help? Do they have a plan, right? And if they don't, now, right, this is where raise your hand, right? So it may not be a 5-alarm fire, but there may be something that has to be addressed, because if we don't, we're going to miss on that metric. And now not all metrics are created equally, but if we're missing enough of those, ultimately, we're not going to hit what our aspirational goal was, whether it's for the quarter, the year. And now you start to get into that panic mode around this time. Right? We're not going to hit the number. We're not going to be where we want it to be. Right? Or what we see often is, hey, we're going to deliver the number, but we bought it. Right? So we look great on a top line. Our gross and net are abysmal. Right? So now is it scalable? For some businesses, absolutely, it's just part of the play. For others, no, it can be a death knell, and because it could also create a false sense of security. And so I think it's part of that, total picture. And not everyone in the organization is going to be, needs to see or wants to see, the top and bottom line impact, because they may not be able to, deliver that. Somebody in ops may not be able to deliver, cost to serve. They're not necessarily going to set the pricing. right? So they can deliver what's within their sphere of influence. But they should see the pick, right? If they're looking at it, certainly, at the mid to senior levels, they'll see the total picture, because sometimes your best ideas come from the people who are kind of in that, right? They're in the fight, and you never know what someone might say either, and say, listen, we should try X. And, you try that, and great, that did work or it didn't. But ultimately, it gives us more data to know, all right, is our number still valid? Do we need to reforecast? And, even if we're ruling things out to say we tried it, it didn't work. Ultimately, we need to get to the place where, you mentioned the assumptions. We need to get to the place where we know that the levers we want to move, we can actually move and they matter.
Man, I feel like we could chat about this all day, but my next question really is like, who are you? Who are you? How do you know these things? Can you take me back in time, like little Brendan days? Did you know you're going to be schooling the world on many, many things, sales and marketing, including even just planning to hit numbers, the basics?
Yeah, God, no. For me, certainly coming out of my MBA, I was incredibly fortunate. Really, really lucky. So I'm probably one of the few um, marketing people, brand people, that I never ended up in a siloed environment. So I talk to my colleagues. It doesn't happen often. I was very fortunate when I was recruited out of Fruit of the Loom and went to Samsonite. At the time, we had a fully integrated team where the brand lead, we own the P&L, but we own channels, right? So we own channels, but within our channel ownership, we also own product development, we owned marketing, we owned revenue and COGS, and we worked with a cross-functional team. So we were basically our own little mini business unit. But as a result of that, I couldn't blame the salesperson, because we were in it together. If we were going in front of JCPenney's or Sears or, any other service merchandise, best products, or whatever it was, Walmart, Kmart, right? We worked together as a team. So any of the handoff and the normal bashing, it didn't exist. So I was so blessed. And the company went through some different evolutions. And again, it just provided so much exceptional learning. And it really broke that down. I then went to Hasbro, and it was a similar area. They had a U.S. sales and marketing, so we had product development, where we would basically create the P&L, we'd create the product plan, and we would give it to product development and say, we need these 15 SKUs and these licenses at these price points, one of which was going to be a TV driver, right? So we would work with our product development team, we'd evaluate what they came back with, but we would bring it to market. And, again, we were tied together with sales and with ops, because in that industry, everything's made in you make your money in the fourth quarter, but you buy your product in the summer, right? So supply chain commitments, you have some flexibility on long lead items. So you'd have to get out in front of that, but some of it's a fashion oriented game, right? So we launched Teletubbies. We took Teletubbies from basically $5 million to $100 million in the course of 18 months. 6 months after that, it was down to a $50 million brand. So you have these massive waves within consumer. And so, for me, there was never a chance to point the finger at someone else, because we were all in the same boat. So I think that's led to this, I was incredibly fortunate. I never was in the classic silos. I was always part of, marketing and revenue were always tied together at the hip. And it's something that, I feel incredibly blessed about, because one, I just worked with incredible people for fantastic brands and learned just a tremendous amount that I, still utilize to this day.
It's a wild adventure how it gets there. If you were to go back in time and meet yourself a couple days after that undergrad, what kind of things would you tell yourself?
Boy, that's a great question. Just take risks. look for the opportunities that will provide the maximum amount of exposure and learning. Like for me to move from, at the time I moved from Capital One to a small, basically failing consumer health product company. It was family owned, and it really was in a challenging spot. And my gut told me I probably shouldn't make this move. I ended up making the move because there was something exciting about going to a smaller business and being able to implement all of the things I always said I would do when I was at the larger companies, but the bureaucracy wouldn't allow us to do. And ultimately, that's the company that ended up in the Oval Office for. So, I think that, take those risks and look for, the good that comes out of all situations, right? The learning that comes out of the failures, whether it's a new product launch or, I was part of a startup company that died during COVID. All of those mix of experiences, can make for a pretty fun career.
I put my cruise hat on, where do you want people to reach out?
I love the hat. That's a good color on you.
Hey, I really like this color. Where do they reach out? They get more information on you, connect with you, chat after the line, talk to Cruise. Where do you want them to go?
Honestly, for us, our number one core value is help first. So I probably talk to 5 to 10 companies a week. It's just that. It's a conversation. We may be able to send them some templates that they can use. We may be able to make some introductions for them. So we're always willing to have a conversation. Easiest way to reach me is, send me an email, brendan.leonard@cruiseandco.com, andco.com, or, on LinkedIn. So you can always hit me up on LinkedIn, but, send me an email. We're always, whether it's myself or anyone on our team, we're always looking to help companies, get better and drive, more favorable growth.
Hell yeah, man. Dude, thank you so much for coming on here, schooling me up. We got we got so many takeaways, so many things I'm thinking about as we enter Q4 and think about 2026 and beyond. So this has just been absolutely fantastic. I appreciate you coming on here.
Thanks so much, Casey. I appreciate the opportunity. This is an amazing venue, and I'm very grateful for the opportunity.
Hell yeah. For those listening, if you learned something, I freaking know you did. I literally have 2 pages of notes over here front. Then share this with someone else who needs help with their planning. Maybe it's you. Share this episode with your team if you're looking to try to build out a plan for the next future years, and also hit up Cruise. And with that, Brendan, thank you again, sir.
Thanks so much, Casey. Take care.
All right, everyone. This has been a crazy cool, very exciting episode of the Hardcore Marketing Show. We will see you all next time.